Hey, what's going on everyone? CryptoVatsik here with another technical analysis video for you. As always, nothing of what you're about to see is considered financial advice and they are just my opinions. If you enjoy this content, I would really appreciate it if you smash the like button and subscribe to the channel. Let's get into some charts. Okay, today I'm going to be covering Kaspa, and over the course of the last year, this one has shown some serious relative strength. But let's get into currently what we're seeing. So first off, after we put in our local high up here on November 19th, we put in a macro high and we're on the daily time frame here. And then more recently, we've just put in a pretty major low here a couple days ago. So that formed a pretty large range that we have to work with here. And as you can see, currently price really fighting to reclaim that equilibrium of the range. This wick that we had here a couple days ago was a major flush of liquidity, which in my opinion is a really good thing if you're bullish, because it means on a technical standpoint, we've retested this consolidation area already. So it might have been enough of a flush for us to continue the momentum upwards. The second range that I'm going to note on the chart comes from our swing highs up here down to this swing low here. So that's a bit more of a local range to work with, and you can use it on some of the lower time frames such as the 12 and 6 hour. And what I'm going to do is I'm going to mark out a zone here between the equilibriums of our macro range that we have here and then between the equilibrium of the local range that we have here. So that's this zone right in here. So in my opinion, that's a key SR level that I want to see reclaimed on high time frame if I'm going to consider taking on risk to the upside. Let's drop down to the 12-hour time frame now. The other thing I'm going to note is the diagonal that we have here, clearly from all these highs. So it's another piece of information to use if you're targeting a breakout of that diagonal and then a push up to the range high. In my opinion, we've already had a pretty major correction, especially when you see a wick like this that we had here on January 3rd. We already had our break in market structure after this major push up to our high at just over 15 cents, okay, where we were making higher lows, and then we had ultimately our break in market structure here, which formed after we had this weakening of price here, relative strength weakening, our swing failure pattern here in comparison to this prior high. And then ultimately, as I said, that break in market structure, break in the trend, in other words. And then we started to consolidate around the 100 exponential moving average here in the thin gray line following price, putting in lows below it and highs above it. And then ultimately mean reverting back to the equilibrium, which you'll notice is right around our green key SR level that I've noted here. And it is also the level at which was the origin of our breakdown here, which is simply denoted from this low, these lows, and this third low until we ultimately broke down and truly lost that level. So in my opinion, that is really where the origin of the breakdown began for this area of consolidation to happen. And we've seen this correction before, so the criteria is very similar. And I'll just go back to a prior setup that we saw recently back here in May 2023. So very simple. Again, we had that major break in market structure, lost the EMA, bearish underside retest of that EMA, dumped and put in our low, had a significant buyback, and then put in a higher low. So you can draw another range just like we did a second ago from this high and bring it down to that low. And when you saw price to bottom out here, consolidate right underneath the equilibrium of the range with a breakout to the upside, it was a good sign that relative strength was increasing, and then we got a nice deviation below that range EQ for ultimately a retest of that area, which was clearly also an SR level from this prior area of support that was eventually lost, lining up right with the equilibrium. So essentially this is the price action that I'm looking for right now on current price action. So we'll go back. Okay, so we've got our high, we've got our low, we've got our equilibrium of the range. It would be perfectly fine if we continued to consolidate within our local range here, range high, range low. But ultimately, as I said, maybe one more flush of these lows down into demand, but then a swift reclaim of that equilibrium here. Another thing to note is the relative strength or the buyback on Kaspa since this recent flush that we had. When you look at other altcoins, you may notice across the board that there's a massive flush similar to this wick here with a dwindled buyback and maybe even a retest of that bottom of the wick. Whereas you can look on Kaspa, at least on some exchanges, but not all of them, had a very nice buyback up to market price where we are now. But more importantly, it was able to reclaim a stable structure, meaning we were able to reclaim these lows. We were able to come back up to that range EQ for further consolidation. We are putting pressure already again on this diagonal, the downward diagonal, and we are above the exponential moving average here in the thin gray line. That's what I mean when we have stabilized the structure versus if price was still down here trying to come back up for probably for ultimate rejection. So relative strength on Kaspa is major. Another piece of evidence that the flush has was completed is if we take our fib level from the beginning of the leg to its completion, you'll notice we actually deviated quite below the 618 fib, which typically crypto likes to retrace to. In a very bullish structure, it could be the 382, but more often than not, it's the 618. Now, it's not to say that price can't still come back down towards these lows for further consolidation within our overall local range here. But the fact that we've had this major flush with such a buyback leads me to believe that if we start to reclaim this key SR level and we break this diagonal and we maintain the EMA, then certainly I think it's this range high as a target, and then only a matter of time until the macro range high is another target, or in other words, for continuation. Now, we do have resistance that we're still fighting. Like I said, from the origin of the breakdown here, in my opinion, that is the resistance that we are currently getting rejected off of. There is supply up there. Liquidity is suppressing price. So that's fine. It might just take a little bit more time to really break out and recapture that supply pressure or recapture that level. But again, as I said, I think it really comes down to this green zone, which is our key SR. So if we're able to get candle closes on high time frame above that level, high time frames such as 12-hour or even better the daily, candle closes above that key SR, in my opinion, is a reclaim of this breakdown origin. So to get involved on a trade like this, you're going to need to set your invalidations, of course. The most obvious one might be this low, but in my opinion, the R and R is not in your favor, as that's quite a gap from market price down to the low. It's about 10%. So I'm not willing to take that. Instead, I'm going to monitor and wait for a reclaim of this SR. Even if we consolidate more under this diagonal, maybe we test these lows again, and then it's a final breakout, consolidate, a reclaim of that SR. This is the price action that I'm looking for an entry or an invalidation. Entry up here, stop loss below the prior low. Easier said than done. So let's go back to an example where that's happened. So back here again, June 2023, a couple of options here. So you're looking for that bullish break in market structure. For example, this downtrend, bearish market structure, we had a bullish breaker with a very shallow back test. Same with this price action here in green. You just got to zoom in a little bit more. So we'll go to the 6 hour. Okay, here on the 6 hour, clearly this is our correction right here. We put in our low, and since price is fractal, you'll see this again here, even on lower time frame, but we'll stick to the 6 hour for now. We put in a high, we put in higher lows in comparison to this low. So that's kind of your trigger one. But then if you notice, you take our range from the high to the low. What did we do? We reclaimed the equilibrium. That's your entry. Stop below the low. If you're feeling risky, you can put it below the prior leg's low. But when people say wait for that confirmation, to me, that's that confirmation. We clearly had an area of breakdown here. Put in our low. There's our range. Reclaim the EQ. Target the range highs with take profits above if you like. And if you notice, we also had a break in this diagonal here. Classic breakout and back test on the upside of that diagonal. Okay, so that's again just what I'm looking for with the current price action. And it happens over and over. Okay, we had it back here. We had it right here, September 2023. Okay, you know, can take it from this low, this high, draw your range, or to be perfectly fair, from the high down to the actual low here, the bottom. You see price start to break this bearish market structure, sweeps of demand, putting in higher lows or equal lows near the range low after our bottom. Break in market structure from this prior lower high, putting in a higher high, reclaiming the equilibrium. There's your sweet spot. We're back above the exponential moving average. You start to see this consolidation. These are where you buy the dips and put your stop below either candle close or the wick if you're feeling friskier. But ultimately, nice consolidation here, as I said, driving price up, not making new highs, but consolidating for that ultimate breakout and structurally reclaiming those levels. Okay, the equilibrium, origin of breakdown here, break in market structure, consolidating above the EMA, all those things just adding confluence. So I see it being no different this time. Just zoom into the lower time frames for those precision setup, but remember to use high time frame for that bigger picture, clear view of macro direction. So same thing here. We've got the local diagonal. You can even take it a bigger diagonal, whatever you like. And I mean, since we've got this major wick, I would personally like to see just a little bit more sell off, come back down towards that EMA, back into demand, sweep these lows, get a good entry, consolidate a little bit further, break out above both of these diagonals, no matter how you draw it, consolidate and reclaim that key SR level in green, otherwise the macro range equilibrium. And at that point, I would most likely compound my entry or my position and take it up to prior highs, local range high, these highs, macro range high, and it absolutely would be leaving some for price discovery all-time highs, considering the relative strength on Kaspa. Anyways, guys, that's it for today. Thank you so much for joining. If you enjoyed this video, I'd really appreciate it if you smash that like button, and don't forget to subscribe for future updates, and I'll catch you next time. Peace.